Hi friends, welcome to our channel. Let me remind 3 golden rules. Invest early, invest regularly, invest for long term, not for short term. Today, this video intention is to busting out the myths about stock market. As per my planning, my next video is stock market basics part 2, that is stages in stock market. But I have decided that first I have to clear the myths from the minds of the public about stock market. Myths in the sense wrong assumption. Before going to our topic, a small reminder. This is my new channel, started approximately a week ago. If you like my content and explanation, please do subscribe my channel. If you want regular updates about stock market, please join in our Telegram group. Link is in the description. First myth that people believe. Investments in stock market are very risky. Here my intention is not to say that investments in stock market are very easy, but as per Warren Buffett, the stock market is designed to transfer money from the active to the patient. Let me explain with an example. This is the performance of Sensex for the past 30 years. If you see here, Sensex is trading at 2615 in 1992, and the next year it was gone to 3346. Like that it is going on. In between 1998 and 1999, the Sensex moved to 5000 points, and the very next year it was falls to 3972, and it get recover in 2003. In between 2004 and 2005, the Sensex has rallied to approximately 50%. At that time, an active investor may square off all his portfolio to book profits. The very next year, Sensex moved to 13,786 points, and thereafter 20,286. Wow, क्या बात है. Wait. Between 2007 and 2008, the Sensex has declined to more than 50%. At that situation, an active investor may exit from the market to lowering the losses. And then Sensex get recovered in 2010 after a massive fall. Like that it is going on happening. If you are an patient investor, don't be bothered about the fluctuation of prices. Right now, Sensex is trading around 52,000. My suggestion is don't speculate the market. Just study the market if you are an investor. By this, I want to say that we can generate a huge wealth in the long term. Myth number 2 that people believe. You need to have a very strong knowledge about finance. Here, my intention is not to say that without knowledge we can generate wealth in stock market. If you see at this picture, there are some names that who are became billionaires in India by trading or investing in stock market. The first person is Mr. Rakesh Jhunjhunwala. He has completed his chartered accountancy. I think everyone who are in stock market or who are beginners in stock market may know his name. Rakesh Jhunjhunwala, also called as Indian Warren Buffett. If you see the second person, Mr. Ramdev Agarwal. He is the promoter of the Motilal Oswal, and he also completed his chartered accountancy. If you see the next person, Mr. Parag Parekh. Do you know Parag Parekh Securities? He is the promoter of the Parag Parekh Securities. He completed his master degree in commerce and economics. Next person is Mr. Vijay Kedia, who has completed his BCom. Now became one of the billionaire in India. Next person is Mr. Porinju Villiath. He completes his law graduation. I will explain about him later. Mr. Ramesh Damani done his HR specialization. Now I am going to introduce you our favorite person, Mr. Radhakishan Damani. Have you ever went to DMart? He was the founder of the DMart and he has market stake in Avenue Supermarket. He was an undergraduate. How can one undergraduate become one of the billionaire in India with net worth $14.5 billion? So, to become successful in stock market, we don't need an high qualified graduation. Okay, let us move to our next myth. Myth number 3, that people believe. Small investors like me cannot make money from the stock market. You have to need lot of money to invest in stock market. Do you know Purinju Vilayat? He comes from a very poor family in Kerala. He faced lot of problems and faces lot of struggles for his education due to his financial condition. He joined in Ernakulam Telephone Exchange as an operator. With that money, he completed his law graduation in Ernakulam Law College. After that, he worked at a very base level at Parag Parek Securities. Do you remember Parag Parek Securities? In which Parag Parek is the promoter of the company. And then he had worked with Gojit Securities. After getting some experience, he started his own venture equity intelligence private limited. By this, I want to say that you don't need lot of money to get successful in stock market unless you are interested in it. Myth number 4, that people believe. Renowned companies can never give strong returns. Now let us have a look at this past 5 years P&L statement of Britannia. In 2014, the turnover of the company is 6,348 crores. It grows continuously and reaches to 9,282 crores. The turnover has increased around 50%. Profit before tax also grows as per turnover. Profit after tax has grown thrice in 5 years, which is very good positive sign to the company. From 2014 to 2018, share price of Britannia has grown to approximately 6 times. Now the share price is 3,600. What is the situation of the investors who has invested in 2018 in this company? Wait, don't be panic about the share price. This is due to stock split. What is this stock split? In our coming videos, I am going to explain stock split very deeply. For basic understanding, now I am going to explain what is stock split. Stock split is a concept that the company split the face value into half or whatever they want. For suppose, if the face value of the company is 2 rupees, then the company split the face value into 1 rupee. As face value split to half, the share price also become to half. Then our holding quantity gets doubled and the share price get half. That is the thing happened in this company also. When the share price went to 5,000, company decided to split the price and face value to half. Then the share price become to 2,500 in 2018. Now the share price is 3,600. This 3,600 is growth from 2,500.